Good afternoon, everybody. Had to look at the clock there to make sure. Today we are looking at WiMi stock. Now, this is a subscriber recommended company. There goes my phone. This is a subscriber recommended company that I'm going to be looking into. I honestly don't know anything about them, so let's just jump right into it and see what's up with WiMi. So, diving right into this wonderful company, holographic services, I genuinely have no clue what that means. Advertising, entertainment, semiconductor. That's all you need to know. Also, they're headquartered in China, which one thing I will say from personal experience, I really um, don't invest in Chinese companies all too often, only because of sort of the political risk with their government and just like kind of unexpected regulations that tend to happen there occasionally that kind of really affect their companies. So, in my own personal opinion, that is a bit of a red flag. But I mean, obviously, everyone invests how they want to invest. I'm not going to tell you what to do, but that's just my own opinion. I tend to be a little bit more cautious of Chinese companies just because of the way that their government tends to regulate. But anyway, getting into the company, they do have 100 million market cap. So right off the bat, high risk. Stay away if you are not ready to take on the risk of 100 million market cap company. Also, 1.2% institutional is kind of crazy. Um, but again, with a small company like this, it's kind of expected. So let's just see kind of what's going on here. So, first of all, growth summary looks a little cautious. They're expecting a sales decline over the next 3 years at least, and seeing some positive growth in 5 years. But other than that, I mean, the profitability looks okay. Net income is supposed to recover in a few years. Um, Book value per share, again, 5 year window here. But overall, nothing too crazy yet. Now, let's get into their income statement, see where they're doing, and there may not be any data for this company from what I'm seeing here, unless we can. Here we go. Okay. So, sales have been dipping significantly over the past few years. Can I get quarters to show up now? Is that going to happen? And it looks like it will not. Okay. So, it seems that this company is not the most traditional, although we do have half year sales. So, as you can see from their half year sales, they have been declining rapidly. Not rapidly, but they are declining in sales, although they did see an increase in the past 2 half years, which is a new thing I'm saying now, I guess. Um, EBIT never positive other than 4 years ago. Net income did just become positive in the past, I'm assuming, couple months, which is good. Um, can't really see too much else that's crazy positive here. I believe that is a $1 million profit. So, I mean, not too bad there. Total shares looks like they are increasing fairly rapidly. Just based on the basic shares outstanding, you could see going from 87 to 98 in 6 months, which is definitely something to keep in mind. Let's go into their balance sheet, see what's going on here. So, sticking with the semi-annual reports here, cash looks okay compared to their debt. They have no long-term debt or very little, which is good. I believe, is this in millions? Yes, it is. So 22 million in short term isn't bad considering how much cash they have. Other than that, assets seem to be doing okay. It looks like they had to sell off a lot in 2023 and have since started bringing that back. Based on the pace they're at, they could be seeing an all-time high in their asset value within a year or two, just based on this increase here. But we'll have to see where they go with that. Other than that, I'm assuming the retained earnings are negative, which they are, which is fine. Heading into the cash flows, we can kind of see where they've been getting their money from. So, because this is an ADR or American Depository Receipt, we aren't going to get as much information as you can see. They are still compliant with everything, but it's a little bit of a different world when it comes to ADRs. But overall, we could see net income did just go positive, which we saw earlier. Operating cash flow also just went positive in the past year, or I guess in the past 12 months, which is very good. And it looks like on top of that, free cash flow went positive as well. You could see also they've been buying a ton of investments, which is good. Other than that, they did just issue a ton of debt, which we saw in the short-term debt on the balance sheet, which is okay. They don't have any unmanageable amount of debt, so that's perfectly fine. But other than that, cash flow looks fairly good, actually really good, considering it's all coming from. Oh, actually, it's not all coming from funds from operations. It's mostly coming from changes in working capital and accruals. So that is actually something to consider. Most of their operating cash flow is positive because of other accruals, which isn't a bad thing. They are still positive in operating. So again, that is not a bad thing. Just saying it is not from funds from operations. So going into the use of cash, we already kind of had some information on this. We could see they did just take out a bunch of debt. No share repurchases activity of any kind at all, but let's just go right into the ratios because there's not too much information there. So for their ratios, we are looking at this. Here we go. Overall, can we do the semi-annual here? It looks like we might be able to. Yes, we can. So their gross margin looks like it is flat over the past 12 months for the most part. Although with the very large sales growth we have seen, that is a good thing. Other than that, operating margin actually improved. Net margin, again, also improved slightly, not as much. Although we did see the net profit, so I'd imagine the net margin, at least for the next reporting period, will be positive, which is pretty good. Other than that, nothing else too crazy. ROA, ROE are both honestly not great. ROE stayed exactly the same. ROA improved a little bit, but still very negative. Going into the debt ratio here, we could see 2% is nothing. That is very good. I mean, we did see earlier they have very little debt. So overall, fairly decent on the financial statements. Let's try to see if they have any earnings reports available. I honestly am not expecting to see anything here. If it'll load for me, I'm sure we could see. And it looks like we actually do have a little bit of information. So let's see what we have. Financial highlights. Revenues increasing by 10%. We have service revenue increasing by 14%, which is really good. Net income increased from 18 million loss to 12 million, which is fairly good, obviously. And then, as they showed earlier, very significant amount of cash, which is very good. Other than that, I'm not seeing too much other crazy stuff here. If you want to read through anything else on this page, just pause here. We're going to go back to the other one. So don't know too much about what this one's about, but again, this is mostly just restating their revenue growth, and then they do have a significant amount of cash. Some management comments. AR application is experiencing rapid growth, huge market opportunity for them. Hopefully they can capitalize on that. Again, they go by halves of the year, it seems, which is perfectly fine. But other than that, drive business growth, research and development, overall looks all right. And we'll get into the chart here if I can find it. So their chart here has kind of been similar to some of the other companies we've been looking at recently, where they are mostly down. Now, again, the sales growth recently could start driving some actual intrinsic value growth, But overall, we could see past 6 months they've actually increased, which is good. It seems like they are kind of taking off over the past couple days, especially today, actually, which I genuinely didn't even know about. They popped up all the way to 150. So this could be a pretty big play very soon. It seems like they could have some consolidation happening, and it looks like they have been consolidating for a nice long time here, just based on all of these higher lows that have been forming very consistently. So that is definitely something major to take a look at. Um, just based on the pop today and compared to the last ones, I'm guessing it will drop back down to the support line, but could be a very solid short-term play just based on where how this chart is looking. And if we zoom it out and go to the weekly time frame, we can see it looks honestly even better on the weekly. I'd imagine it will again drop down to this sort of looks like right around the 70 to 80 cent range. Now it could uh, obviously gather some value here and keep some investors in the company. It looks like this has been mostly a swing trading stock where because its market value is so low, people just wait for bottoms, buy it up, and then sell it immediately, or at least maybe a week or two later, just based on the way the chart is looking with these frequent pop ups and then dropping immediately back down. So overall, it does look like it is very tradable short term, but overall, I would probably wait until that 75-80 cent range when we hit the support area again. But overall, that's about it for WiMi. Again, another very high risk company. Make sure to do your own research on this before you go into it. Obviously, I mostly just cover the surface. So make sure you look into these things. That's about it. That's all I have for today. Make sure to subscribe if you haven't. I do these videos basically every day of the week. So see everybody in the next one.